Okay, let's unpack this. You're tuned in for your essential briefing, and today's deep dive into Bitcoin, well, it's revealing some shifts far beyond just the daily price ticker.
Hmm.
We're witnessing some foundational changes happening, really transforming how this asset fits into the global financial landscape. It's kind of redefining what Bitcoin is.
Indeed. And what's truly fascinating here is how so many different threads, from minute-by-minute market mechanics to long-term institutional strategy and even global politics, are all sort of converging right now.
Right.
Our mission today really is to pull apart these complex layers, show you how Bitcoin is evolving into, well, a truly mature, multifaceted asset, giving you that clear shortcut to being well-informed on where it is now and where it might be heading.
Okay, so let's start where, frankly, many of us begin our day.
Yeah.
The immediate market activity. Looking at the last 24 hours, Bitcoin's shown some modest gains. It's currently trading around $112,500.
That's right.
We saw it test that resistance near $112,900 after bouncing pretty strongly off support, around $110,600.
Exactly. Strong bounce there.
But the real headline here, I think, isn't just the price movement itself. It's the sheer trading volume. It's surged, hasn't it? Approximately $40.83 billion.
Yeah, huge volume.
What does that tell us? What's really happening beneath these, price fluctuations?
Well, this substantial rise in trading volume, it strongly suggests a significant influx of, let's say, new capital.
Right.
The market is actively engaged, and it's really testing a critical resistance zone. Specifically, that band between 111,922 DAOs and $113,000.
Ah, okay.
So for anyone watching the charts, this isn't just noise, it's a key inflection point where we could actually see a decisive breakout.
So we're truly at a pivotal moment then. What would you say are the key technical indicators confirming this potential upward push? And I guess equally, what signals a failure? What should we watch for?
Okay, good question. On the technical side, a pretty robust support cluster has formed. It's around 110,886 twos to $111,099.
Right.
And this support, it's reinforced because you've got the 20, 50, and 100-period exponential moving averages, the EMAs, all converging there. It creates a really solid base that, a lot of institutional algorithms track.
Okay, so the algos are watching that.
Definitely. And for those who follow market momentum, the MACD, the moving average convergence divergence, it's signaling a gradual bullish crossover.
Slowly turning up.
Slowly but surely. It indicates that upward momentum is systematically building. Suggests, more than just a speculative spike. Based on these models, we're looking at maybe a potential 1.52% increase. That targets $113,500 maybe in the next 24 hours.
Okay.
And possibly even an extension to $115,000 this week if this bullish feeling, really holds. But a failure, as you asked. If we fail to break that $113,000 resistance with sustained volume, then we could easily see a retest of those stronger support levels we just mentioned.
Got it. So strong indicators suggesting upward momentum's building. But this immediate market activity, it's not just day-to-day noise, is it? It feels like a surface ripple, reflecting something much deeper, a foundational shift in who actually owns Bitcoin.
Precisely. If we connect this to the bigger picture, yeah, it's really about the very structure of Bitcoin ownership, and that transformation fundamentally alters its risk profile.
Exactly. Beyond the daily charts, there's this fascinating, almost seismic structural change underway in Bitcoin ownership. People are calling it the Great Redistribution, a pretty significant shift from what we historically called whales, right? These massive, often anonymous holders to something else entirely. And for the informed investor, this isn't just maturation. It's a recalibration of how you analyze Bitcoin, how you position it in your portfolio.
That's absolutely right. Crypto quant analysis, it shows a rapid decline in addresses holding over 1,000 BTC. Those were historically our whales.
Right, the big movers.
The big movers, exactly. The ones whose large unilateral actions could trigger significant market volatility. But simultaneously, addresses holding between 100 and 1,000 BTC, let's call them the medium players, they're increasing dramatically.
And this isn't just like random individuals getting richer, is it? It feels very institutional. It has far-reaching implications.
Absolutely. This rise in these medium player addresses, it's directly linked to the increasing role of institutional investment vehicles, particularly the spot Bitcoin ETFs.
Ah, the ETFs again.
Yes. When asset managers like, say, BlackRock or Fidelity purchase Bitcoin for their ETF investors, those coins get held in large, regulated custody wallets. On-chain, these aggregate holdings just appear as these medium-sized addresses. It represents collective ownership, not individual concentrated power.
Okay, so this raises a really important question then.
Yeah.
What does this all mean for Bitcoin's risk profile? In the past, yeah, whale movements were a huge source of volatility.
Oh, definitely.
Now, with decision-making diffused across thousands, maybe millions of ETF investors, does the market become inherently more resilient, less prone to those sudden individual-driven shocks?
That's exactly the thinking. It means Bitcoin's risk profile isn't just lower, it's fundamentally different.
Yeah.
You're moving away from tracking individual large wallets towards understanding institutional liquidity flows and macroeconomic sensitivity, much more like traditional assets.
Interesting.
It's a fundamental maturation, really, moving from that concentrated risk to a more distributed and therefore arguably more stable ownership structure.
Yeah.
And this shift directly feeds into that virtuous cycle we're starting to see.
Right, the idea that increased stability attracts more institutional capital, which then reinforces that stability.
Exactly.
And this increasing stability naturally paves the way for greater institutional confidence, broader adoption. Speaking of which, corporate adoption. We're seeing some truly groundbreaking moves there from both the pioneers and some new titans in the space.
It's a significant evolution. Bitcoin's moving further into mainstream finance. It's really not just a fringe asset anymore.
Remember Strategy, formerly MicroStrategy? They pretty much pioneered the corporate Bitcoin treasury concept.
Michael Saylor.
Their journey is still incredibly important even as new players enter the field and, frankly, innovate on that model.
Indeed. Strategy was recently passed over for S&P 500 inclusion. That was a bit of a disappointment for some, especially since they met key eligibility requirements.
Right.
However, they remain a prominent candidate for the next rebalancing, probably in December. And what's particularly significant here is the potential strategy effect.
Explain that.
Well, if they are included, it would trigger this massive non-discretionary wave of buying from passive index funds. Think about it. Millions of investors suddenly get inadvertent Bitcoin exposure through their 401ks, their brokerage accounts.
Wow.
It's not just the exposure, though. It's a psychological shift. When traditional investors just find Bitcoin sitting in their retirement funds, it helps normalize the asset class. It blurs that line between a speculative venture and, a staple investment.
And they're still buying, aren't they?
Oh, yeah. Strategy just acquired another $217.4 million worth of Bitcoin in the past week. Their stock, MSTR, is widely seen as basically a leveraged proxy for Bitcoin itself.
But it's not just Strategy anymore. We're seeing these new purpose-built Bitcoin treasury vehicles using really sophisticated financial engineering. I mean, the real headline here is that merger between asset entities and Strive Enterprises, set to create a $1.5 billion Bitcoin treasury.
This is a remarkable development. It really showcases a new era of corporate Bitcoin strategy.
Yeah.
Shares of asset entities, ticker ASST, they surged over 50% after shareholders approved the merger.
Makes sense.
The new entity, Strive, Inc., aims to raise $1.5 billion, specifically for Bitcoin acquisition. That could potentially place it among the top 10 corporate holders globally. And how they're doing it is interesting. They're using a reverse merger and a $750 million PIPE deal.
A PIPE deal, private investment in public equity.
Exactly. It's a direct offering of stock to private investors, usually institutional, to quickly raise substantial capital outside of a regular public market offering. Plus, there's potential for another $750 million from warrants.
So very different model.
Yeah, this sophisticated financing model establishes a Bitcoin treasury as like a standalone business model. Not just an allocation strategy for an existing company. It's a deliberate ground-up approach to becoming a pure-play Bitcoin treasury.
In this corporate momentum, it feels like it's being amplified by a rapidly changing political climate, doesn't it? What does this mean for the perceived risk for corporations looking at Bitcoin now?
It means a significant de-risking, I think, from both a regulatory and, frankly, a reputational standpoint.
Yeah.
The current administration has enacted some crypto-friendly policies, which act as a powerful tailwind.
Right.
And it's not just policy in the abstract.
Yeah.
We're seeing deep involvement from entities associated with, politically influential figures. For example, World Liberty Financial, which launched a token, and Trump Media and Technology Group. They're exploring Bitcoin reserves.
Oh, media specifically.
Yeah, they specifically plan a corporate Bitcoin reserve and are exploring an ETF that would invest in BTC, ETH, SOL, and XRP. And another group, QMMM Holdings, also announced plans to hold Ethereum and Solana alongside Bitcoin.
So broad digital asset interests.
Right. And this top-down support, without endorsing any specific political figures, it certainly signals a broader acceptance of digital assets within influential circles. It just lowers the barrier to entry for corporations, makes Bitcoin allocation less of a radical bet and more of a, perhaps, strategic alignment with prevailing trends.
That political de-risking makes it much easier for a corporate board to sign off, I imagine.
Exact. Much easier conversation.
Okay, so we've got a maturing market, institutional adoption kicking in, political tailwinds, at least in the US. But what does this all mean for regulation and the broader economy on a global scale? Because in the US, we're seeing these moves toward clarity, integration with traditional finance, but globally, the picture seems much more fragmented.
Yeah, it really is. In the U.S., there's definitely a concerted push for regulatory harmony. You see the SEC and CFTC actively collaborating to modernize rules. That's crucial for reducing ambiguity for institutions. It's another pillar of that virtuous cycle we talked about.
Right, clarity helps institutions commit.
Precisely. And simultaneously, Bitcoin is becoming highly sensitive to macroeconomic data, much more like traditional assets. For instance, there was that significant downward revision of U.S. jobs data recently, erasing 911,000 jobs from previous reports. That immediately shifted expectations for Federal Reserve policy.
That's a huge revision in jobs numbers. For our listeners, what are the direct implications of that kind of economic data point for Bitcoin specifically?
Well, the bond markets reacted instantly. Traders are now pricing in something like a 92% probability of an interest rate cut at the Fed's upcoming September meeting.
Wow, 92%.
Yeah, with more cuts anticipated after that. This weak economic data increases the likelihood of monetary easing, more liquidity in the system, which is generally seen as bullish for risk assets, and Bitcoin is increasingly seen as one of those.
Like tech stocks or other growth assets.
Exactly. We're drawing parallels to the early 1990s when Fed cuts responding to a weakening economy fueled, I think it was about a 30% stock market rebound. It just shows Bitcoin moving from what was once considered this purely uncorrelated asset to one that's much more intertwined with global monetary policy and broader economic health.
So for your own portfolio, this means watching things like jobs reports, inflation figures. It becomes as crucial for Bitcoin now as it is for any other major asset.
Absolutely critical.
Meanwhile, as the U.S. pushes for clarity, we have major economies in Asia taking wildly different approaches to crypto. It really is a tale of two strategies playing out globally.
Oh, definitely. You've got Vietnam actively embracing the industry. They have a 5-year pilot program for regulated crypto trading. It requires Vietnamese companies' local currency use, a pretty hefty $379 million capital requirement.
Yeah.
But it leads to formal legal recognition in January 2026.
So they're rolling out the welcome mat, essentially.
Pretty much. Positioning themselves as a potential hub for innovation and capital. Conversely, you have India, which is leaning against a comprehensive framework. They seem to fear systemic risks, and they're maintaining only partial oversight, but with these quite punitive taxes. It creates a much less inviting environment for businesses.
So this raises a big question then. How will these diverging paths affect where capital flows, where talent goes in that region, and what does it mean for global regulatory harmony or lack thereof?
It's a crucial question. Countries that actively create clear, welcoming frameworks will likely attract investment and talent. Those that resist might find themselves playing catch-up down the line.
Okay, let's shift gears slightly. The ecosystem for actually accessing digital assets. It's rapidly expanding, becoming incredibly sophisticated. It's so far beyond just buying and selling Bitcoin now. It really reflects a market maturing at, well, an astonishing pace.
It really is fascinating how quickly asset managers are moving beyond just Bitcoin. Grayscale, for example, has filed to convert its trusts for Litecoin, LTC, Hedera, HBAR, and Bitcoin Cash, BCH, into spot ETFs. That signals a much wider acceptance for altcoins.
Litecoin and Bitcoin Cash ETFs.
Okay. And then this next development, it really takes things to another level. A spot Dogecoin, DOGE ETF, is anticipated to launch as soon as September 11th.
A Dogecoin ETF.
Seriously.
Seriously. And REX Shares is employing this novel strategy by registering it as a mutual fund under the Investment Company Act of 1940, apparently for faster market access.
Wow. Okay. Which honestly still makes me smile a little. It shows just how far we've come, doesn't it? From like pure internet meme to a mainstream financial product.
Yeah.
Wall Street finds a way, huh? Even in a Shiba Inu's smile.
So we're seeing two different regulatory paths emerge for these products then. The more traditional 33 Act and this more agile 40 Act for assets like Dogecoin. What's the significance of that distinction for investors?
Exactly right. It reveals this bifurcation. You've got the more rigorous 33 Act path, maybe for what you consider blue chip digital assets like Bitcoin and Ethereum, focusing on investor protection for established markets.
Okay.
And then This more agile 40 Act path perhaps for assets with immense cultural relevance and, huge retail demand like Dogecoin. It allows for quicker market entry. For you, the investor, it just means more options faster. It shows Wall Street's adaptability in creating products for a whole spectrum of digital assets. But it also shows regulators are finding different frameworks to accommodate varying risk profiles and market structures.
Interesting. And it's not just new ETFs, right? The market infrastructure is deepening with truly institutional-grade tools designed for long-term players.
That's absolutely right. Cboe Global Markets, for instance, plans to introduce groundbreaking 10-year dated futures contracts for both Bitcoin and Ethereum.
10 years? That's a long time horizon in crypto.
It really is. And it provides crucial tools for long-term hedging for institutions like pension funds, endowments, allows them to manage exposure over much longer horizons. That's a key sign of a truly maturing market.
Definitely.
And simultaneously, NASDAQ is working with regulators to launch a platform for tokenized securities, using blockchain technology to upgrade traditional financial infrastructure, think faster settlement, increase transparency.
So blurring the lines.
Exactly. It points toward a future where maybe crypto markets and traditional markets become increasingly blurred, where digital assets and blockchain tech just become the new rails for all financial transactions.
And there are other developments too.
Yeah, other key ecosystem things happening. Gemini is pursuing a $3 billion IPO on NASDAQ. Luxor and Canaan are partnering on financing for new miners. TRM Labs launched the Beacon Network to help combat crypto crime. It all contributes to a more robust, legitimate, and integrated industry overall.
So let's try and wrap this up. What does all of this mean? Today's deep dive, it paints a pretty clear picture, I think. Bitcoin is undergoing this rapid, profound transformation. It's moving into a more stable, liquid, and deeply integrated market, really shedding that image as just a niche, volatile asset.
Yeah, the central theme here is really that virtuous cycle we keep coming back to. Regulatory clarity enables institutional products,
Which drives capital inflow,
which leads to a de-risking of the asset.
which encourages further corporate adoption.
Exactly. It transforms the nature of risks as opportunities. They're shifting away from being purely technological and speculative towards being primarily financial, regulatory, and macroeconomic. So, looking ahead, what should you monitor? I'd say the pace of mainstream corporate adoption especially, that strategy S&P 500 inclusion story, and new ventures like Strive.
Right.
Keep an eye on the altcoin ETF pipeline, and importantly, the net inflow data for all these products. Watch the specifics of U.S. regulatory frameworks as the SEC-FTC collaboration evolves, and track how Bitcoin's macroeconomic correlation plays out with central bank policy and broader economic data. Those are the forces shaping the next phase.
It's clear Bitcoin isn't just a niche asset anymore. It's a rapidly evolving force within the global financial system. So as it continues this journey, maybe consider this. How might the concepts of digital scarcity and decentralized finance, now infused with this growing institutional stability, fundamentally reshape not just how we invest, but maybe how global economies actually operate in the next decade? It's a pretty profound question worth mulling over.